Okay, recording this video after close of trade Wednesday, 27th of October 2010, and you're going to have to forgive me, but in this video I'm going to blow my trumpet a little bit. But before I do that, just run through today's charts. I think it was quite an important day today. We basically, as I see it, had a reversal day today. Closed down about 4 points at 79, 1.9 million contracts traded. But this pattern's quite important. I've seen this in a couple of different ways on my charts, and I want to talk about this kind of turning point we've just seen. This is a red, white and blue pattern on better volume. Now I don't really use better volume in my day trading anymore. I just use a Pro-Am instead. I find that simpler for my trading purposes. But this is a fairly important kind of pattern. We get an exhaustion sell-off bar, white bar here, very large volume, down bar, exhaustion selling. Then we get a blue bar here, which is showing high volume churn, so relatively high volume and low range for those couple of bars down there at the bottom, and then finished off with a red bar, exhaustion kind of buying, climactic buying that sets off this move. And typically you see kind of moves like that or patterns like that where we get kind of a reversal and a change in trend. I'm also seeing this on my average trade size chart, and I don't show this chart very frequently just because I've not released the code and probably don't plan to, but it just gives me an indication of where the professionals are playing and where we see unusually high average trade size. And this is what we were seeing at the bottom today after the open, around the 68 to kind of 72 to 74 type level. We saw all of these high average trade size bars, which shows these are professionals buying at these lows, which suggests to me we're going to have a little bit of a run to the upside tomorrow. And when I look at the 40,500 tip bar chart on the Emini, you can see this similar type of pattern. We kind of broke below this cyclical turning point, but all these professional blue bars kind of came in, stopping volume pattern, profit taking pattern and so on, and we kind of broke them back above that cyclical resistance level, support level. So we're likely to test the 1190 type levels over the next couple of days, I think. Now I'm just going to show you another couple of charts because over the last 2 weeks things that I was talking about have kind of come to pass. One of them is just on the euro here, and I was saying a couple of weeks ago we had this really important sign. I was saying, I've been saying in this lead up to this high at $41.5, $41.5 on the euro that I was looking for professional up bars with an end of trend warning signal, and that was a good signal. I'd been looking all the way up this kind of move for a reversal, and it was only until we saw these professional blue bars, exhaustion buying, finally after a flush signal, and we'd had exhaustion buying prior to that, all this weak buying and an end of trend. So we've got exhaustion in terms of price, in terms of professionals, and in terms of volume, that we get a reversal of trade, and then we kind of go the other way. This was an interesting kind of pullback back up to the 140, 140 and a half type level. And I should call this something, because I've been seeing this regularly now. It's something like it's a last roll of the dice type pattern where we come back to test these highs and we get exhaustion buying at this point, and then the market just gives way. We tested it twice up at this 40 and a half type level, and then the market kind of gave away. And in my view, we've not seen the lows. Yes, we might have a little bounce. We've got all this kind of bullish divergence happening at these points, but look, no professional blue bars kind of down here signaling that the professionals are really kind of buying into these new lows. So I think we're into a reversal of trend in terms of the dollar and the other currencies. So for me that's important because I've got my currency overlays on my assets, so I'm going to be starting to move into the dollar and away from the Aussie dollar. The other kind of pattern that's come evident over the last couple of weeks is this huge move in the bond market. I was talking about this. I'll show you a couple of charts here. First of all, coming into these highs at 136, 135, we had all of these flush signals at these highs, and there were those professional blue bars right at the high, signaling that we were likely to have a sell-off, and we had a huge sell-off in the bond market. Again, yes, we've got all these flush signals now at the bottom, and we're likely to see, possibly a little bit of a bounce. But again, we've not seen any professional blue bars at these lows, so this move isn't over. And then here's this same kind of pattern, this last roll of the dice type pattern here. the down move starts and then we get a retracement back, and we had two exhaustion buying bars back up here, but they just can't get going, and those are the professionals coming in, slamming this market, taking taking profits, going short as fast as the buyers kind of come into the market here, and the market kind of takes off to the downside. So this kind of last roll of the dice is an important signal. And then just looking at this on, I was talking about this, that was the tick bar chart, but let's back off a couple of time frames back to a daily chart. Again, I think this is a really significant break in the bond market. We'd had, coming into September, we had an end of trend warning signal, all these professional blue bars, exhaustion buying, and then bearish divergence. We kind of sold off. Second cyclical turn after an end of trend warning signal, often the start of a new change in trend. This time when we came up into the highs, we have a flush signal, flushing out these last of these buyers, and then up here we've got these bearish divergence signals here, right at these highs, 135 again, and the market cracks. We've broken now through a cyclical support level, so we're likely to move into a strong downtrend. Yes, there's going to be kind of retracements and so on, but this is an important move in terms of the bond market. And I was talking about this on the interest rate charts over the last month and a half, that I was saying that we had a cyclical turning point on these daily time frames that was coinciding with cyclical turns on the monthly charts, and this was going to be really important. So this is the TY, the 30-year bond rate, and the bond rate's moved now above 4%. We've cracked up above a cyclical resistance level. The TN, the 10-year, again, we had cyclical support here over the last couple of weeks. Now we've cracked above this cyclical resistance level into an uptrend, and the 5-year as well. We had our end of trend, we sunk below that a little bit in the last few days. So all of these interest rates starting to move up. Now we've got all kinds of moves in different directions, and frankly, they're mixed signals. We've got the bonds moving down, we've got interest rates moving up, we've got equities moving up, suggesting kind of that combination, with interest rates moving up and equities moving up is, back to global growth, and so worrying about higher inflation rates and so on, and yet the US dollar is going up and not down, and then some of the commodity markets like copper today kind of collapsed. So all kinds of mixed signals there, but something's definitely happening in terms of a turning point in the market. So just watch out. Then lastly, just on my day trading on the 4,500 tip bar chart, the market we had exhaustion buying at the end of Tuesday, and so we'd started into a down move. It was pretty severe overnight. This is end of session yesterday, and the open today was pretty severe. Came into a cyclical turning point here, but then when we came back into another cyclical turning point here, we had bearish divergence, very weak buying and so on, and this downtrend was not over. It wasn't over until we saw professionals kind of coming into the market here. I was able to get short on a break below 74.50, which was a good little trade. Again, took my profits way too early on this move, but it wasn't until we hit the end of the day, midday, that we started to see a bottom form, a little amateur bar down there. It would be nice if this amateur bar had a low, kind of for the low of the day. That would have been a nice Rambo pattern. Didn't, but we'd have professional buying here, bullish divergence, and so on. Not exactly an exhaustion selling signal on this time frame, but the selling was pretty extreme. Here we got to levels that we'd seen on typical kind of exhaustion selling type signals previously. So although this one didn't signal on the downside, we could see this kind of rounding out move happen and a change of trend. We're now above a cyclical resistance level and broken into an uptrend. This signal here, this exhaustion buying signal, is not signaling a change in trend to a downtrend. Remember, you have to interpret where you see these. This is jumping the creek, just like we saw yesterday. We've got a resistance level at this point here. This is an important level. It's been support earlier on in the day. It's now turned into resistance at the end of the day, and when we break through it like this with exhaustion buying at this point, that's a professional blue bar right there. You can see that's jumping across the creek. We come back to test with these amateur down bars. The amateurs are thinking, I'm going to get short for the rest of the afternoon, and no, we've had a change of trend. We bounce off this cyclical resistance level that's now become support, and we've broken into an uptrend. So I'd expect to see some strength over the next couple of days. Anyway, so there we go. Hope your trading went well today.